G'day everyone, welcome back to Pete's Investing. Here we're looking at the index and gold update, and we're asking the question, has consolidation ended for these various indexes? We track the markets across Australia, Europe and the US, also for China and gold. Firstly, we're not recommending you trade any of these positions or instruments, rather this is purely an educational series. And also very importantly, don't forget to hit the subscribe and notification button and the like button. And for added explanation of our strategies, go to Pete's Investing channel. There's different playlists here. We review the share prices and indexes weekly, and this is the index review today in this video. But also, we've also got this strategy playlist, and that's where you can see the strategies in more detail explained in what we're using in these videos. So again, everything from the simple strategy, the averaging down approach, down to the money management. So please reference those in the playlist for further explanation. So let's first go to the Aussie market, the ASX 200. And what I've done here is drawn these vertical lines. These indicate week by week how the price has performed. And this is on a 15-minute chart. And it goes back as far as roughly 18 months. Sorry, in this case, 5 months. 5 months. Now you can see here this trend line has been drawn, and that's where the price has been tracking potentially. But looking at the shorter term, it's been consolidating between this support level and this resistance level. Now this price has spiked up in the last few days or few hours of trade, in the last couple of hours especially. It's spiked up here, and it may well bounce down and retrace back from that resistance level. We'll see what it does in the coming week. Other than to say that we've now, since we opened this trade back middle of February, it's added to the position here end of last week, and the profitability you'll notice there as 62.63 compared to where it was on the open there at 57.58. So we've already gone above our profitability of our before our start on this particular trade with 2 open positions, and we've got 10 contracts we're trading, and don't forget we're adding 5 contracts every time we enter a trade. So we entered 5 contracts here for these few weeks. End of last week we entered another 5, hence the 10 contracts total. So this is looking okay for the Australian or the ASX 200 index, and we'll see how it performs in the coming days, as we said, should it retrace back or continue in an uptrend. Next we'll look at the US market. And similarly, as you can see here, it's consolidated last couple of weeks, had a bit of an uptrend here, and it spiked in the last few hours of trade here. So again, that may well retrace back from that level there and come back down, or it may continue up, and we'll see what that does. So here we entered 5 contracts, middle of March, and if you look at the profitability, 26.70 versus on the open 26.65, so it's break even at the moment, but again let's see how it performs in the coming days. We're not in a position to add any more contracts at this point. That CCI 100 needs to drop below the 0 line and bounce back up, but it also needs to be well below the open position to add any further positions to this, and we haven't done that yet. So it looks like we'll be holding 5 contracts in the short term. Next we look at Germany. Similarly, in the last couple of weeks, it's accumulated or consolidated. This only opened up this week, fresh 5 contracts. It's broken above the break-even point. Again, it's spiked up in the last few hours, a couple of hours of trade. Profitability at 13.285 versus the open of 12.276. So this is performing quite nicely. It may well close out in the coming days if it continues in an uptrend. It's broken above the support level there, or the resistance level there, so that's a good sign, but it may well come back down and bounce off this support line here. We'll see how it goes. The Ftse, the UK market. Again, this has been held on from an open position back here, middle of February, 5 contracts. It's gone sideways, come back down below this support line, and it's bouncing back up. So again, this hasn't broken our resistance levels yet. but we'll see what it does. Our profitability is 72.76 versus the open back there of 72.35. So it's about break even on our open. Last of the indexes is China. This is where we've had our biggest impact on our profitability for all those trades, if you were trading these. Now this is our downward trend line. So it's gone basically continued in a slightly downward motion in this week of trading. It's added 3 levels of positions there. We're holding 15 contracts open, but we're still below our baseline of 100,000 at 90,075. Lastly, gold. Again, you can see there it's continued on a downward spike, downward trend, holding at 15 contracts and just below our $100,000 baseline. But we're not panicking, we're holding on to those. So what that looks like in terms of the profitability, this week's summary. So over the 5 months of looking at those trades, overall we're 18,500 approximate in terms of profitability versus the drawdowns of each of those required, and that works out to about 3,700 a month of that 18,500. You can see there China and gold are still the ones in negative territory. Now how that looks like in from compared to the previous week's trades. Previous week, don't forget, we looked at $30,000 in the red for China, which put us in a negative at 4,600 overall. So this week we've actually come back on that based on the upward movement of those shares. So still China and gold are holding us back, but we're in a positive profitability stage at this point. So that's where we are at the moment in terms of our analysis on the indexes. And the other thing I want to mention as well is beginning from March, ending March 27, which was yesterday, the margins required have gone up from 2.5% of the margin rate of the indexes, now requesting 5% margins. So where previously the ASX required about $34 per margin per contract, it's now asking $340 odd. The US market originally asked for about $19, now it's asking $199 and so on. So the margins have been increased, in Australia at least, according to the ASIC rules and requirements. That's the major change. So what that's going to mean is that you're going to need more funds in your account to fund this, and profitability should remain the same in these patterns. All right, everyone, don't forget to click on the subscribe and notification bells for future updates, and I'll be putting out some further videos during the week, hopefully with some added information as they come to hand. Thanks, and speak to you next week.